Hello, my name's Brad Teal, and together with all of my staff across our 10 offices, we're very happy to bring you a quick snapshot of the September 2015 marketplace. Now, the weekend before the grand final was called Super Saturday for a reason. There were more than 1,100 auctions up on that Saturday with very substantial clearance rates, but in particular, we were 95% clearance rate for Brad Teal Real Estate across all offices. That is quite remarkable because there's enormous volume of the auctions that we complete, and to have a clearance rate of that, it's exceptional. The property market has seen continuing growth, and in fact Melbourne has run at 7.6% growth for the 3 months ending September 30, 2015. That is extraordinary for such a small space of time and across such a vast metropolis as Melbourne. The number of auctions held in the month of September was 31% higher this year, 2015, than last year. That's a very substantial rise in stock levels in any marketplace. 10% would normally be a large spike, but 31% quite remarkable. And the clearance rates at auctions continue to be very high. One of the things that we study a lot at Brad Teal Real Estate and convey to our vendors is the importance of days on market. And across the offices, we still beat the market average of days on market. In Essendon, 36 sales, good solid month for stock levels. 32 days on market was Brad Teal Real Estate days on market against the market average of 40. Ascot Vale, 18 sales, 33 days on market against 59. Avondale Heights had 15 sales, which is a bit of a spike in the volume of sales in that area. 27 days on market for Brad Teal Real Estate against a market average of 52, so almost half by a couple of days. Brunswick, 87 sales. That is a mega marketplace over there. Our sales days on market was 33 against a market average of 32, one over. It's roughly the right proportion. Coburg, 36 sales, 53 days on market against the market average of 64. Pascoe Vale, 48 sales, 38 days on market against 40. Caroline Springs, we were inside by 5, 51 versus 56 days on market. Keilor with 3 sales is a very small marketplace, and I expect a bit of a spike in the sales and stock levels over October and November because July, August and September has seen very little activity of stock availability and also sales in that Keilor Park area. So I do expect to see more stock come on the market. Sunbury, 17 sales, and we were just outside the days on market. And Gisborne, 8 sales for that area, and that once again is a small amount of sales, and I expect an increase in volume over the coming months. Our rental wrap for September sees us once again up around that 80 mark for lettings for the month of September. What we're finding is that because we encourage landlords to invest back into their properties with updating kitchens, appliances, making sure that tiling is good in bathrooms, repaint, recarpet, new blinds. If you reinvest back into your property over time, you'll keep your rentals high and as you are more lettable and more appealing to prospective tenants, but also more importantly, you keep your vacancy factor very low so that as one tenant moves out, another tenant moves in. And that's one of the things that we're finding, that we have low stock levels where we're finding that properties are let before the expiry of the 28-day vacancy period. This is a really big aspect of landlords getting strong returns on their rental investments. 1 and 2 bedroom flats in a city are struggling just a little bit as we see the new stock coming online from so many developments around Mount Alexander Road and Flemington Road and Sydney Road. These bigger developments with sometimes hundreds of apartments coming on stream are providing some very competitive rentals, and people are choosing to move into newer properties where there's maybe an underground and they go up to their apartment in the lift, and that's putting a little bit of downward pressure on the rentals of the older style 1 and 2 bedroom apartments. Stock in many offices is low, but their vacancy factor is down in 1.5%, so that's very strong as well. So there's a bit of an update of the property market today. Early in October, we see the Reserve Bank will meet, and it's expected that they will retain interest rates at the same level. The stock market has a little bit of volatility recently, which typically means that people will focus on the more stable market movement of property, so don't be surprised if we see some more good strong numbers coming through from the property market as people shift money out of the stock market because of that volatility and risk. And overall, we expect a really strong finish to the springtime marketplace, with October and November seeing really strong stock levels. In November in particular, we're seeing a bit of a flurry there. We hope you've enjoyed our market wrap and get some information out of it. Ring any of our offices and get information on vacancy factor, on median prices for any suburb. We're very happy to provide you with any information you need. Maybe it's just out of interest. What is my home worth? Give us a call. We're happy to work that out for you and provide you with a very detailed, at no obligation and no fee, report for you, so that you can even just update your insurance, know what your investment property is worth. That's what we do, provide information, and one day we're sure that we'll be able to act on your behalf. Letting as a landlord, maybe it means you move in as a tenant or as a buyer or a vendor in the sale of real estate. We look forward to seeing you in our next monthly update.